Hello, welcome to this week's broadcast. I'm going to do an analysis about our weekly outlook. Not today. Today I had a lot of running around to do. Same as yesterday, I also had a lot of running around to do, so I wasn't able to do a bit of trading. I didn't do trading on Monday. On Tuesday, I didn't have a lot of trades in. Wednesday, I didn't have a lot of trades in. That's today. So I've been a bit inactive this week because I had a bit of errands and issues I was handling. One of the things I wanted to talk about today, just a tidbit advice for traders. When you're trading, you have to put a couple of things into consideration. You have to trading involves combining a lot of things to come up with a decision whether to buy or sell. And you can be in a buy position, you can be in a sell position. Sometimes it's good to be in no position at all. One of the reasons I'm talking about this is because we had high impact news. I think it was Monday, I think it was Monday. High impact news on Monday. That blew up a lot of people. A lot of people got blown up because of high impact news. Sometimes when this news is going to come out, if your position is not in high profit, if you're not sure where the market is going to go with the high news, with the high impact news, it's good to be out of the market and let the news pass and get back into the market. Or if your position has been in profit for a long period of time, it's good to move your stop losses to areas of support or resistance, so that if the news impacts your pair that you're trading or your commodity that you're trading badly, it will come out and hit that stop loss. Please remember, stop losses are your friends. There are people who have traded news and make money trading news. It has been there for a long period of time. People trade news and make money trading news. You have to manage your risk appropriately when you're trading news. I have heard from a number of friends who blew up during this news. The news that came out, the CPI news that came out. Let me see if this will give me yesterday's news. Yeah. So, GBP. Yeah, I think this was the news that came out. There was CPI news that came out on Monday. Yeah, CPI news that came out on Monday. And this hammered people who are in gold. The people who are in gold sales, the people who had been selling gold for a long time, because let's just pull up the gold chart. Let's pull up the gold chart. Here we are. We have the gold chart here. So the people who had been selling gold, and all of a sudden when this news came out, gold went the other direction. Yeah, let's hold on to that as it's loading. Gold went the other direction. Yes, and when gold went the other direction, people got blown up. People are holding very huge negatives. That's not how we're supposed to trade. We're supposed to trade with stop losses. You're supposed to put stop losses on every trade. In fact, I have a famous saying that when are you wrong? When are you wrong? Whenever you're getting into a trade, you need to understand, when am I wrong? Yeah, let's look at this. You see what happened? Gold had been trending downwards. Gold had been trending downwards for all these. The previous day it had been trending downwards, but earlier that day, gold started to trend upwards in anticipation of the news. Some analysts say that normally this news is priced in even before the news appears. So gold started trending upwards. Here, as you can see, gold started trending upwards before the news came out. So when the news came out, imagine we had a move of more than, how many pips are these? Yeah? We had news that came out. Let's just use this same tool, this tool. If we started measuring from here, you see, that's over 200 pips. We move it here. I don't know, it's not responding. Okay, let's say the news came out about there. That's over 200 pips of movement. You see that? That's over 200 pips of movement. If news came out around here and hit up to up there, that's over 200 pips of movement. So it's rare, unless you're in a position that was more than 3 days, 4 days a week, you've been holding gold for 2 weeks, you'd have been in position to absorb that kind of move. But if you weren't, you're not in position to absorb that kind of move. So here is my suggestion. Always have a stop loss in mind. Before you enter trade, know what you're risking maximum. You get it? So, and when you're heading towards high impact news, try as much as possible to move your stop losses to break even, or increase the stop losses a little, but in having in mind that this is the amount of money I'm willing to lose if things were to go against me. That's very key in trading. That is how you will last longer in your trading journey. I didn't have much of analysis. I wanted to look at all these pairs that went haywire. There was gold, did that. We had the Canadian pairs that had Canadian in them. Let's look at NZD Canadian. Look at that move. You've seen that high move there? Went in the opposite direction. Look at US dollar, Canadian dollar. And look at this. Throughout the day, it had been bullish. Yes? But if you looked at this was early analysis that we had earlier, and we were waiting for price to hit there so that we could take a sell, which it went in our favor. It would have gone in our favor if we were in this particular trade, which we weren't in because I was doing my rounds, but I had already plotted this a couple of days back. Yeah. Look at things like Euro US dollar. Yeah. They were all affected by that news. You've seen that. Went out of the range. Shoo, a heap of pips right there. So imagine you were selling this and it went against you. It went against you 150 pips, close to 150 pips, and you're heavily leveraged with huge lot sizes. You'll be in trouble. You get that? So let's try as much as possible. One, I have a saying, when am I wrong? Yes, when am I wrong? That you need to have that. You need to have that at the back of your mind before you place a trade. When am I wrong? If you have that at the back of your mind, you'll always survive the markets, because you know I'm risking $10, I'm risking $20, I'm risking $100, I'm risking $200. Once it hits me $200, I am wrong. Then you reverse engineer the number of lots you'll be entering for that trade. But when you have answered that question, when am I wrong? Have that at the back of your mind and you will survive these markets. This is not gambling. Yes, this is not gambling. This is not poker. In fact, there are people who have studied the games of poker and know when to place bets on what. Yes, because they have understood the game. They know when the odds are in their favor, when the odds are not in their favor. That is what we need to concentrate on as traders. We shall survive the market. We shall be successful at them. But when we manage risk appropriately, when we're heading into news, if you're not sure the direction the market will be going, cut down on the exposure you have. Yeah. If you're trading news, then make sure that you know how much you're willing to risk to lose. I have always had another saying that kamikaze is not success. It's not kamikaze is what we call going in full, whether I die or I die. If I die or I die, yeah. It's not sustainable. It's not sustainable at all. You do kamikaze with money that you're willing to lose. Don't do kamikaze if you're depending on trading for long term. Do kamikaze on money that you're willing to lose. Maybe money that you'd use to spend on coffee or something. You can attempt kamikaze on that. Outside that, no. Yes, don't do that. Those are my 2 cents for now. I'll get time during the course of the week and do a real analysis for all pairs. I'm not actively trading this week because I have a lot going on. I have a lot going on that's outside of trading, so I'm a bit up and down. So having no trade is also a position, because you held on to all your capital. When you're having no trade, it's also a position. So think about that as well. There are times where it's okay to not have a trade on. Yeah, and don't multiply a problem. Don't multiply. If you're in drawdown, let it go. Leave to trade another day. Don't try to fight yourself out of drawdown, because drawdown happens. That's part and parcel of trading. Taking losses happens. That's part and parcel of trading. Take the loss, leave to fight another day. I have been in positions where I've grown a $20 account to $100. I've grown $100 account to $1,000. So no matter where you are, you can always grow, provided you're following the principles. Your entries actually have a reason. There's a reason why you're entering the trade. There's a reason. You have an idea of where the trend is going. Yeah, if you maintain that, then you'll maintain longevity in trading. Thank you. This is Peter. Have a blast. Ciao, ciao.